Hello and welcome back to Let's Talk Forex, Alison and Chris. This week we're talking about double tops, which is a very common chart pattern, but it's also frequently misidentified and confused with other common chart patterns. So tune in to learn how to identify it properly and how to use it in your trading. As always, you can get in touch with us at podcast@fxscouts.com, and please follow us on social media. We're on Twitter and YouTube, Facebook and LinkedIn. Thanks so much and enjoy this week's episode.
Hey Chris, how are you doing?
Yeah, I'm pretty good, Alison. Can't complain. How are you?
I'm good. Kenton on Sea is treating us well, as it does.
As
And
it always
you?
does. Yeah, no, Portugal's fantastic. Sun is shining, birds are singing. All is good in the world.
Oh, good. Well, in this episode, we are going to focus on a trading pattern that displays regularly on the charts. And it's a high probability pattern. And basically, if you're able to recognize it, then you can time your entries and exits more precisely.
That's right. And this pattern is called a double top. It's also, you can be seen as a double bottom as well. And Alison, you've just done a video on double tops, haven't you?
I have,
On YouTube.
Yeah, a couple of months ago.
So you can go check that out too. We'll pop a link in the show notes. Yeah, I think it's a really good video as a follow-up to this episode. But yeah, let's jump in.
Yeah, so basically a double top is a bearish or downward reversal trading pattern. So this means that when you see this pattern, then you can speculate that the price will go down. And it's made up of two peaks above a support level known as the neckline. And how you'll recognize it on your chart is that it looks like the letter M.
Yeah, exactly. And the first peak will come immediately after a strong bullish or upward trend. You're then going to see a retracement down to the neckline. Once it hits this level, the momentum will shift to bullish, up once again to form the second peak, the second part of the M. And after this, the price is then going to reverse and move down below the neckline, and then it's going to keep on going.
Exactly. Yeah, so it's quite a simple pattern, but it's important that you know how to identify it. So with a true double top reversal pattern, it basically has 6 key features and 6 key things that you have to look out for to confirm that it is indeed a double top. And the first thing is that you have to have an upward trend. So the price should be clearly moving upward before the pattern forms. And an upward trend is always confirmed by higher highs and higher lows. So if you notice that, you could notice the pattern forming the first peak after an uptrend has just occurred.
Yeah, exactly. And then the second thing you want to look for is you want to identify the first peak. This is going to be a gradual continuation of the uptrend, and the price will hit a level of resistance and will then reverse downwards to a support level. The reversal is common profit taking, usually, and after a long and gradual increase in the price.
Yeah, exactly. And then you're going to get the development of the trough. So with that profit taking, the trough would reach basically a 10 to 20% decline. But it may persist for some time. It might sort of last in a bit of a range for some time. And the level that it reaches is basically the support level or that neckline. So it goes up into the peak and then goes down into the trough, the first peak of the M.
Yep. And then, the fourth thing you look out for is the development of that second peak. The second peak is going to form as the price climbs to the level of the first peak. However, the resistance from the first peak does not need to be reached, right? So it doesn't need to go all the way as high as the first peak. But the second peak should generally come within about 3% is what you're looking for on the charts, 3% of the original peak.
Yeah, so you might see a slight difference in the heights of the peaks, but you'll notice that they're both respecting the same sort of resistance level. And then you're going to get the decline. So it'll sort of form the last part of the M. And this often occurs quite rapidly on high volume. So just check out your volume indicators and you'll probably find that the decline is going to happen very quickly. And sometimes even with some gap downs in price to reinforce the strong selling pressure, often with the failure to breach the resistance of that peak.
Yeah.
So that's also another telltale sign that this is a double top and that this is a reversal that's happening.
Yeah. And then finally, you're going to get the support break. So the decline that you were just talking about there, Alison, of that double top reversal, it's going to continue with a really sharp break through the support provided by that trough between the two peaks. And this downtrend is now, it's going to last for some time before it pauses.
Yeah. So those are the 6 different sort of key factors you can look for to identify the double top. So I'm just going to go over the game. Number 1, you have the uptrend. 2, you'll be able to identify the first peak. 3, the development of the trough. 4, the development of the second peak. 5, the decline. And 6, you get the support break or the break below that neckline of the trough. So if you're going to trade the double top, there are 3 ways to trade it. First, you can wait for the price to cross below the neckline, as we were talking about now. Or just to describe it more thoroughly in your minds, where the second peak of the M reverses downwards, confirming the double top pattern. And this signals that there is definitely a trend reversal occurring. So you can obviously start a short trade or a sell position after that break happens. And it's very important that is the confirmation. Once it breaks below that support, that's when you know this definitely is a reversal.
Mm-hmm.
If you're looking at managing your risk, then you want to maybe put a stop loss order above the most recent swing high, which is the second peak often, to obviously reduce your risk. And you can also project the vertical distance between the highest peak and the neckline to determine your profit target. So if you measure that distance, then just project that downwards on the below that neckline, and you'll find that's where your profit target should be. And that's also been studied over and over again, and a lot of other traders will be seeing that. So you'll find that's often, a good place to set your take profit.
Yeah, exactly. It's good advice. Second way you can do this, after the neckline is broken, the price may occasionally retest from below before continuing the downward movement. So as part of this technique, you're going to watch for a price break below the neckline, wait for a retreat to the neckline, and then search for a downward confirmation signal. So you're looking for a bearish candlestick pattern, a trend line break, or a lower high, and then you're going to place a short trade. Profit target here can be established using various techniques. This includes projecting the pattern's height downward from the peak to the trough, or you can just simply locate probable support levels.
Yeah, exactly. And then lastly, a third technique is that you can use extra technical indicators or oscillators to make the double top pattern more reliable. So you can check for bearish divergence on the moving average convergence divergence. That's a mouthful, the MACD, histogram, or the relative strength index. When these indicators display lower highs as the price develops the 2 peaks. So when the price is going upwards, but the indicators are showing sort of downwards movements, this is actually what divergence is. And often when you see divergence, you know that a reversal is about to occur. So it's something you can check out for, as a confirmation on your chart as well.
Yeah, and the MACD and the RSI are great for that kind of thing, for showing that. So let's talk a bit about the risks here with the double top. The main error that traders make when using the double top chart pattern is they place their trades too early before the break through the trough support level. The double top reversal is not truly confirmed, as you said, Alison, until that support level is breached. This is really important here because you very often see, 3, 4, and even 5 top patterns. They're really common in long-term price action. And only when that trough support level is broken can you be confident that you've got a valid double top reversal pattern on your hands.
Exactly. So I think that's probably the most important point. But also, as with technical indicators and chart patterns, these patterns are by no means certain trend indicators. So you always want to use other indicators and, other information to inform your trades. And And yeah, as you said, the breakthrough that support is often a sure sign, but, just be aware of the broader market and what's going on.
Yeah, exactly. Always. So double top patterns, they're really useful for identifying long-term price trends. So and for a day trader, you can choose the most appropriate short-term indicators and patterns to use for making your actual trades. But yeah, traders should be cautious when trading with chart patterns because there's often multiple tops. This is a really common pattern among long-term price action, and you're going to have to wait until that trough resistance level is broken before trading on the downtrend.
Yeah. And another thing is that it's easy to see chart patterns everywhere. So once you start to note or about double tops, you're going to start seeing them everywhere and think that there's reversals happening all over the place. But just be aware of checking for the key defining details of these patterns. As we mentioned before, those 6 different details will help you to really confirm whether or not this is a double top happening. And of course, you need to keep abreast of the fundamentals and, whether the fundamentals support the fact that a reversal could be occurring. It's also important not to just not to rely too heavily on technical analysis alone.
Yeah, that's true. That's true. Cool. Well, thanks so much for listening. Thanks for your time today, Alison.
Yeah, thank you too, Chris. And as we said earlier, we do have a video. We actually have quite a few education pages on double top trading. So if you want some more visuals to go along with what we've just been talking about, you can go check those out, and we'll put links in the show notes.
Yeah, superb. All right, Alison. Well, I look forward to speaking to you next week.
Yeah, cool. Thanks, Chris.
Cheers.
Yes.